Hi everyone, it's Sean Sanderlands from Pulse Markets, Senior Investment Advisor, here today with the Chairman of Leigh Creek Energy, Justin Peters. Firstly, hi Justin, how are you?
Good, thanks, Sean. How are you? It's good to be talking again.
I'm great, thanks, Justin. As you know, we've done several of these in the past, and it's a good way for us to communicate to not only your shareholders and our clients what Leigh Creek's up to at the moment. So I'd just like to ask you a few questions which we think are really relevant to the current market and the current life cycle Leigh Creek's in. And I'm hoping I can just grab half an hour or so of your time, if that's okay, please.
That's fine. I look forward to it.
Great. Thanks, Justin. One thing we noticed last year, which we thought was very significant for the company, which I'm sure you did too, was the granting of the PPL. We found it really strange, but the market sort of reacted on the day, but I don't think it really took in the significance of this into the share price. Can you explain why you think that is?
Look, I think it's a good observation, Sean. The PPL was something that was incredibly important to this company. And it's interesting that when we first started Leigh Creek, I always considered that obtaining the final production license was probably the major milestone and probably the hardest milestone we could actually achieve. And it's quite amazing that we actually achieved that production license in the time frame we did. Other companies take up 5 and 8 years for their approval process. From the time we completed the demonstration plant to the time we were granted the production license, took us just over 12 months, which was amazing. It wasn't recognised in the market, and you learn when you're in the marketplace. You learn when you're on a listed company. You can't predict how the market's going to react to important milestones. But one thing we have learned as a company is that sometimes those milestones, particularly important ones, take longer than you expect. It didn't in this case. But I think that their market recognition was slow because I don't think it fully understood the importance of the production license. We are the only company in the world that does underground gasification and has been granted a production license. It was a lengthy process we went through with the South Australian government. It was an exhaustive process, and it was one we achieved. I would say that even though the market didn't seem to recognise the importance of the production license, I can assure you that fund managers and investors did. Fund managers in particular commented regularly when we were in front of them that the granting of that license, they also saw as the major obstacle. So the fact that we achieved it was great. I think that, as in all things, the market will take care of itself, and I think we'll get recognised for our achievements and our milestones, because this is a long game, not a short game.
Thanks for that, Justin. One group that certainly did take notice of this, looking at the timing of a recent ASX announcement with DL and EC where you've got a binding heads of agreement with them, an exclusivity for a feasibility study and finance. Can you give me a little bit more information on that, please?
We're really pleased with the announcement we just made with regards to the heads of agreement with Daly. A lot of people are very cynical about heads of agreements and memorandums of understanding, and we can understand that too, I might add. It's very easy to get a heads of agreement, but this one was very different. And the reason it was different was, firstly, it was a Korean company and their credibility is extremely high. The other reason there was the fact that they specifically asked for a binding heads of agreement and an exclusivity period for that heads of agreement so that we could work through the project details with them. The importance of that agreement can't be underestimated. Anyone can sign an EPC contract with another company. We simply sign a contract with them and we pay them money to do the project and we do the work. This one is different in that DLM have proposed to us that they would take care of a large majority of the funding arrangement through one of their connections. And they are a well-connected company in Korea with financial institutions. And that is what we're working through with them at the moment. It was extremely important also that we went with Daly for this. And the reason for that is pretty clear if we know the macroeconomics in the marketplace at the moment. We've been in a situation where our largest shareholder is a Chinese company. We've worked closely with those companies over the last couple of years, but that relationship between the Australian government and the Chinese government has deteriorated to the point where we thought it was prudent to actually start looking outside of a Chinese company being our partner in this process. That allowed us to then look at companies in Europe talked to companies in the US, and talked to other countries in Asia, in Japan and in Korea. And after we went through that process, we were comfortable with a couple of things, but Dalim's capacity to be able to deliver on a project like this was something that was very important. And their capacity is demonstrated. It is not a first-time project for them. They made it very clear that they could do so. And we've had a look at some of their projects that are very similar, and we're very confident that they can do that.
Okay, that's great. So who actually are they, and do they have experience with ammonia and urea?
There's a Dalim, what's called a chaebol, I think is the correct terminology, but it's a very large Korean company. It's interesting that in Korea, they're worth billions of dollars, but in Korea, they're actually considered a middle-sized company when you have all the likes of Samsung, POSCO, and a few of the other very, very large companies there. So they're a large construction company. They have specialized in the past in EPC contracts and with engineering roles, but they've expanded that since about 1966 when they moved out of Korea and started to broaden their horizons in other countries. So they've moved into planning, investment, finance, and construction and operation in its portfolios. They're also in numerous countries, and I've got a list here and I won't go through them all, but most importantly, the United States and Saudi Arabia. They're in Kuwait, China, Vietnam, Singapore, and Brunei, and this will be their first venture into Australia. And they already built ammonia and urea plants in different locations throughout the world. So once again, this will not be a first for them.
That's fantastic. That experience really will go far for us. Do they have the balance sheet to do this themselves? You did mention that they do have contacts. Can you just elaborate a little bit more on that, please?
And look, one of the important points when we're choosing an EPC contractor was to have a look at their size, their ability to be able to participate in the funding process. Japanese companies have been doing this for many years. If you have a look at JBIG in Japan, the Japanese companies who contract outside of Japan can obtain finance from Japan as long as that money's spent largely on that Japanese company, no matter where it goes. This company has a large bank balance that can actually look at debt or equity within its own balance sheet, but more importantly, it can leverage its relationship with those financial institutions in Korea to deliver on a finance package in this deal. And that's what we're working with them at the moment on.
Okay, that's great. Lastly, just on this issue, we think, as advised, the finance obviously is very important. And you've mentioned a key date, which is the 31st of May. How's that going at this stage? And do you think you actually hit that date?
The 31st of May was an interesting date. It was one we had to announce in that ASX announcement because it's a binding exclusive period. That date is actually not the date that we need to complete the contracts or the deal by, but it was a date that was set initially because they had asked for exclusivity. So initially it was we'd grant them a 4-week period of exclusivity that we wouldn't talk to any competitors in the marketplace and allow them to work with us. They wanted that exclusivity because they were going to spend a lot of resources, time and effort, and their legal team working through the EPC contract, the funding arrangement with their funders in Korea, and they needed the ability to have that exclusivity so that they wouldn't, the bottom line, we weren't using them as a stalking horse or we weren't going to use somebody else. The fact that we're approaching the 31st is not a concern to me. We've been meeting with our lawyers and dealing with them almost, well, not almost, on a daily basis to get this done by the 31st. If we don't have it completed by the 31st, that's not a concern. We simply can extend it for whatever period we want to extend it for, whether it's 1 week or 1 month. I think there are a couple of points in there that's worth emphasising. I think the first is that most of us know how much paperwork and contract work's involved in a simple loan for a house. Right? This is not $100,000 or $1 million house. We're talking about hundreds of millions of dollars here. And as a result, the contracts that are used in EPC contracts are hundreds of pages long. And I think we also underestimated the effect of COVID on this process. And that was that normally we would sit face to face in a meeting for a week, we'd thrash out the details. Where there were issues, we could actually sort them out there and then. Unfortunately, we're in a situation where we send up comments, track changes, issues through our lawyers on these different contracts and agreements. They get them translated, then it gets sent back and retranslated. And each one of those processes takes longer than it would normally do face to face. Having said that, we're really pleased with the progress here. As I said, we meet with them daily. We speak to them many times each day. They have a project director that's working with our project director on this, and we are very confident we're going to close this one. I hope by the end of this month, but certainly if not, within the next few weeks.
That's fantastic. I think you've answered my next question, which how advanced are the discussions. So thank you for doing that.
Extremely advanced. As I said, this is complex because it covers more than just simply an EPC contract and a funding arrangement. There are other issues to our advantage, and that's to both of our companies' advantage in progressing that relationship further. And we're working through those issues as well, but very comfortable on the EPC and the funding side of this particular arrangement.
Excellent. As discussed, they're going to fund a portion of the funding that's required for stage 2, leaving a balance to be funded elsewhere. Will that be hard to fund?
Not at all. Funding the whole project would have been an interesting problem for us. That would have been much harder. With someone like Dalem sitting there on the majority of the funding for the project, then obviously we're left with the balance, and we have several ways we can do that. The offtake agreement, if we actually complete an offtake agreement, and I'll actually discuss that a bit later anyway, but if we complete that offtake agreement, then it gives us the ability to raise funds against that offtake agreement. But in addition to that, we have other offers on the table. We have other people talking to us about funding that gap between what would be funded through Dalem's contacts and associations and through our end. So we're very comfortable that we can actually go ahead with the balance of funding from us.
I'll tell you what, I think you're reading my mind, because I was about to ask, is there just more than one group wanting to fund you? Which I think that's very important, that everyone would like to know that, actually.
We have to work out what's the best for all the parties in this, not just simply grabbing the first one that's in front of us.
I think I've noticed that over the years, you do really look towards creating shareholder value. I've noticed that with obviously going into Urea, it was the best thing for the company moving forward, or the best way to make money. In talking about funding, are you looking at, from what I'm hearing here, it's a majority of debt, or is there going to be an equity component to it? Or what do you think the splits could be?
There are several combinations that we're looking at the moment. One of them, as we said, for the project was full project funding that didn't have an equity component in it. Another one that we're looking at was debt and then an equity component in the project itself, with a second party coming in on an equity play within the project. And then another one, of course, is whether we meet the equity component of the particular project through our own capital raising means. I'm probably least in favour of the last one because it's more dilutionary. However, dilution is not always a bad thing. If you've got a good project sitting there, it's going to be generating decent income.
That's excellent, and I think it certainly will in the future. We touched on offtakes earlier. I noticed in your quarterly there were, I think, 6 heads of agreements that you had sent actually out. Is there any progress there at all?
This is a really complex one, and it's not a complex one because I'm avoiding the answer. This is a complex one because the EPC contract and the project finance in some ways will dictate to us how we move forward on the offtake agreement. And what I mean by that is that with the offtake agreement, we are in advanced stages with several companies. We have offers on the table, by the way, from 2 companies for offtake, one for a percentage of the offtake and one for all of our offtake on the urea. We have to work out which is the best for us. And what I mean by that is, do we split the risk? Do we go with one party for the full amount of urea, or do we split the risk and do 2 or 3 parties for that initial 1 million tonne a year of urea? One's simpler, but the other one is less risky. Mind you, if the party that takes the full amount of the offtake is a seriously fundable party, then that's something we have to consider. And that is the case. One of the other issues is, do we sell all the urea through an offtake agreement, where obviously would have to give a percentage discount on that urea at the time, and then keep some of that for the spot market and be able to leverage and get a better price for that urea in Australia? And these sorts of issues we're going through and considering. I can say that once again that our funding needs for the project will dictate exactly where we move on the offtake agreement. But we are working through with Dalem on the EPC and the funding arrangement, and from that will flow where we decide on the offtake agreement.
So what you're trying to say is offtakes may be necessary to get funding, or?
Well, possibly. And once again, depending on what's there, if we actually have project finance for the large proportion of the project and have another funder who wants to come in on mezzanine or wants to come in with finance on the project, then the offtake agreement is not crucial for the funding. However, those parties that actually put those funds in will feel much more comfortable and a lot more reassured if we have an offtake agreement in place. I can say one of the things that they all recognise is that it's not difficult to sell urea, right? So you don't get left with a commodity, right, that you can't move. And I think that's important at the moment is we're not looking at exporting this particular product. This product is an Australian product. That becomes extremely important when you look at what's happening in world trade markets at the moment. When you have a look at what's happening with coal, you have a look at the threats that are now being put forward on iron ore, the fact that our product can be sold completely in Australia takes all that risk away. So the offtake agreement's important. I would love nothing more than to be able to sit here and announce an offtake agreement today. But that's not in the best interest of the people we're working with, and it's not the best interest of our shareholders.
That's a great answer. Thank you. Okay, now I want to take you back to stage one because we've been talking about stage two. Stage one, which is the 5 megawatt power plant that currently getting built. Is that still on track from our previous discussions to be up and running by January next year?
That is still on track. I'll give one caveat on that, and that is we've been approached by several parties who want to buy more electricity off us than the 5 megawatts. So, for instance, we can go ahead with stage one as it currently is, and planning and approval applications, everything has gone in. Looking at pre-ordering the equipment has already started, engineering has already started on that. So we're moving along very well on that particular phase. We have to examine the two offers that have been made to us about buying electricity and gas off us and see if it's worthwhile us looking at maybe 10 megawatts or 15 and supplying those people electricity or gas. I would think at this stage it's unlikely. I think we'll stay with the current plan on stage one, but it is possible we could expand it slightly.
Okay, great. Now, just moving on to the government, I noticed the budget came out recently. Will Leigh Creek get any assistance from the government at all with financing?
Well, it depends, Sean. It depends on how you define assistance. If you're talking about government grants, cash, financial assistance, I think the answer is pretty unequivocally no. At the moment, we're in a particular part of the industry that's difficult to attract funding from the government. That doesn't worry us, I might add, because we actually don't need funding from them at all. I remember one of my old bosses used to say to me that if you rely on government funding for your business to be successful, he said, you won't have a successful business. And I think that's very, very true. And we're lucky in that we have robust financials. Everything will work without government financial assistance, but we can get assistance in other ways and finance as well. For instance, the royalty issues have to be still determined between us and the government. There are assistance packages they put out, and we've had some of those very small ones already. So when you talk about government assistance, I break it into two categories. One of those is simply a financial one. I think the other one is the level of assistance we get with the government moving through the departments, looking for applications, getting our approvals. And from that point of view, we've had great assistance from the government and from the regulator. We haven't taken any shortcuts in this process. It's been a lengthy process. It's been a frustrating process at times. It's been an expensive process. But I have to say that the government support we've received has been fabulous. I would also point out that the government have recently announced they're going to be spending, $10 million odd in Leigh Creek over the next few years. That all makes it easier for us up there. It is a remote location, and the money they're putting into the town and the work they're putting into the region is something that really does assist us. So yes, we do get government assistance, but not from the grant point of view at the moment. That might change, I might add.
Okay, good luck. You've just mentioned the remote location, which the town of Leigh Creek is. One thing which really attracted me to this project all those years ago when I first met Leigh Creek was that you've got a train line virtually to site, which is fantastic. A lot of other companies don't have that luxury. It's been quite a few years since that moved coal, and it did move a hell of a lot of coal, which I'm assuming it can move a hell of a lot of fertiliser. Are you going to get that train line back in working order so your logistic problem is solved?
And the train line question is a really interesting question. The train line, when Flinders Power handed it back to the state government when their lease expired, or when their lease was terminated when they stopped coal mining up there, had a requirement to actually return it in good condition. I can clearly recall every time we drove up to Leigh Creek from Corn and Hawker that we could see the work that that Flinders Power were doing on the train line. They were replacing old sleepers with cement sleepers. They were working on culverts and bridges. You know, there are some people who seem to think there are hundreds of bridges along that railway line, which is not the case. There are hundreds of culverts, which are 1 and 2 and 3 metres wide, and there are a few bridges, but all of those are in good condition. The fact they haven't had rolling stock on them for the last 2 or 3 years means that there will have to be some work done on them to get them up to that speed that they can take. But once again, we're going to be spending many, many hundreds of millions of dollars on a project up there. If we have to spend millions or a few million on the maintenance of that particular line, that would be the same with any company. Any company that moves coal or iron ore has to spend money on the maintenance of the line, or alternately, the owner of that spends the money on it and you end up paying a fee or tariff like a toll fee. Either way, there will be some costs in maintaining that railway line, but it holds absolutely no fees to us whatsoever.
That's excellent. Onto something topical, which is global at the moment, carbon. You guys have mentioned, or Leigh Creek's mentioned, that you can actually capture it. Do you want to explain to your shareholders how that actually works?
Yeah, Sean, this is actually one of the exciting things about our particular project. And I'm always reminded of the Demtel man telling us how excited he is about something. This is actually quite a genuine statement. And the reason for that is if you look at carbon capture or sequestration, people will be very cynical of it and they'll say it doesn't work. And that's actually not correct. The problem has been that it's not cost effective, right? Or you can't find the right location to do CCS. So for instance, the very first thing is if you're capturing CO2 from industrial sites or from power stations, basically it's what's called post-stack emissions. And you have to be able to strip the CO2 out of large volumes of air and gas, right? And then be able to do something with the CO2. The first part of that for us is we don't have to go through that process, right? We're lucky enough that we can actually strip the CO2 out of our gas stream at point of production. Much lower volumes, much lower cost, much easier to do. Second problem that anyone else who's tried CCS has is they have to find a suitable sink for it. So they've looked at salt aquifers, they've looked at rock formations where it can absorb some of the CO2. We don't have that problem. We have voids in the ground where we've actually gasified. We have a void that's left deep underground that's perfectly suitable for carbon sequestration. You think about it. We have an injection well and extraction well. We already have the wells and we already have the infrastructure to put the CO2 into those voids. Right, it's an incredible advantage. And there's been a lot of work done in Europe on this. Several years ago, 2 major European universities actually did work on underground gasification and then storage in those voids. And it's very, very promising and we're very confident that would work. Another point here. People talk about CO2 sequestration and they're going to capture the CO2, put it underground. They've got to get it from where it's actually generated and get it to where they want to put it. So how are they going to do that? Because they're never next to each other. Well, not never, because ours is. Everyone else's has to be transported. So you either have to pipeline your CO2, which is not cheap. You actually have to build a separate pipeline for that. You can't just put it in any other pipeline that's out there. Or you have to move it and compress it by vehicle. That gets very expensive. Our CO2 sink, or where we're going to sequester, is literally hundreds of meters away from where we're gasifying. All right, so we have an incredible cost advantage there and a logistics advantage. And then finally, and probably most importantly, the actual product we make uses the CO2. So rather than us having a major CO2 gas stream sitting there that we have to dispose of, we use the majority of that CO2 in the production of urea. It gets injected into the process and we end up being almost carbon neutral in the process, and anything left over can be sequestered. So we have this really great opportunity to actually show that this process does work and use it at site.
That's impressive. That really is. Just whilst we're on the green front, hydrogen. Is it still viable, and do you see a market for it?
Look, I love the hydrogen question. It's my favourite question outside of CCS. And the reason for that is, look, it's very tempting as a company to ride the wave. You know, there's the wave out there on hydrogen. Everyone's talking about hydrogen. Politics, different sides of the government are talking about hydrogen. Federally talks about it. State talk about it. Companies talk about using renewable energy to create hydrogen. And I find it really quite fascinating because at Leigh Creek, we can actually make more hydrogen at the site than the whole of the Australian economy uses at the moment. We can make it cheaper than anyone else in Australia can make it. And yet for us, we see no viable market in the hydrogen market at the moment. Right? There is not enough here in Australia to justify being a pure hydrogen play. And remember, if you're talking about hydrogen as this fuel of the future, if we don't gasify properly, we make more hydrogen. Right? The gasification process that we use, we want to produce other products. We want to produce CO, we want to produce methane, we want to produce nitrogen and other products. We can produce as much hydrogen as we need. And yet it's very clear to us, and it's very clear to the people we're talking to, that there is no market here for that hydrogen. So we could apply for government grants. We could make wonderful hydrogen announcements to the market. But the reality is, for us, the best process is to go to ammonia and then to urea. I spoke to someone about this hydrogen issue recently. And I said to them, okay, so all these companies that are coming onto the market to produce hydrogen, who are they going to sell it to? Oh, they can blend it into pipelines. Okay, well, firstly, they've got to get their hydrogen to the pipeline. Secondly, once they get the hydrogen to the pipeline, there's only a small percentage of the hydrogen can be put into a gas pipeline. Oh, well, no, the different industrial companies are going to change their processes to move from natural gas to hydrogen. And to that, I say good luck. That's going to cost a fair bit of money to do, and that's not going to happen quickly. So then I get told, oh, that's all right, we'll export hydrogen. You know, Japan wants it, China wants it, just about everyone in the world is putting their hand up for hydrogen. So, well, how are you going to get it there? You tell me how you're going to get hydrogen from Port Augusta or anywhere in Australia to another location. You have one project at the moment with Kawasaki Heavy Industries, which is looking at direct transport of hydrogen. So they will produce hydrogen in Australia, directly transport that hydrogen to Japan. Everybody else in the world who wants to import hydrogen does not do so. They import ammonia. And you import ammonia, and from ammonia, you can make hydrogen. So liquid ammonia is far easier to transport than hydrogen is to transport. So then your comment is, okay, well, now you've produced hydrogen. Now you've produced hydrogen, but you need ammonia to be able to be the transport medium for it. So you have to build an ammonia plant. I just find it fascinating that hydrogen is a major play, and very few people have actually thought about the process of who they're going to sell it to, how much they're going to sell it to them for, and what the future is.
Okay, well, keep us posted because we don't know either. Okay, just on a different topic now. I noticed in 2017, you got a cornerstone investor, C&E or China New Energy. They've got quite a large holding still, which is great. Are they still supportive of the project? Do you see them as a long-term shareholder? I noticed that they do have a board presence. Are they excited about what's going on?
Look, I think that's a really good question, Sean. You know, a lot of people are concerned that if we went ahead with this project with, you know, a Korean company, would that mean that our Chinese partners were offended or lacked interest in it? There's nothing to be further from the truth. They've been fantastic. And you're right in that we have a board member who is their nominee, who is part of that decision-making process, I might add. It's not some external group. They are actually part of our company, and they've been strong supporters of us. Their view was that with Daylem or with any other company, right, that had the capacity, the capability, the bank balance, that we would be foolish not to explore it properly and to go ahead with any proposal that worked for us. So they've been great about that. And they haven't sold any shares since they started back in 2017. I think there's some important things we need to point out about China New Energy. And their loyalty has been something that does need to be talked about, I think. If you remember in 2017, when they invested the money into us, they were our largest shareholder. I think off the top of my head, it was $20 million they invested into the company back then.
Yep.
All right, at that time, when they invested, we didn't have our approvals to conduct a trial. We didn't have the trial even underway. Since then, we've actually had the approval and conducted the trial. We didn't have the ThyssenKrupp study on urea that showed that urea was the way to go forward, and the costings worked and the funding and the project worked. So we didn't have that study when they invested. We hadn't even completed the PFS when China New Energy invested. We didn't have a PRMS gas reserve. We had a JORC, but we hadn't got the PRMS gas reserve and the 2P that we now have, and they still invested. And we didn't have the ultimate petroleum retention license, petroleum production license. So these guys came in when there was a high level of risk in their investment being safe. And for that, we recognise their support. We recognise the fact they've been great shareholders with us, and the fact that we've de-risked it. We hope we make them a lot of money. We're pretty sure we're going to make them a lot of money. And the great thing about that is we make them a lot of money. We make all of our shareholders a lot of money, right? So they've been very pragmatic. They've been really comfortable with us moving with another company in the project. It hasn't altered their investment strategy at all. It also, I would also point out that remember that we also have a joint venture with CNE to take UCG back to China. That isn't affected in any way by this particular proposal.
Okay, great. With the PPL being that a significant de-risking event, and obviously CNE still being quite comfortable with their investment, have you seen other institutions starting to appear on the share register, or have you got a marketing plan to start acquiring some to come in now that Leigh Creek has been so de-risked?
We've had a couple of fairly large institutions willing to invest in us recently. I have to say that in not all of those cases, we're overly enamoured by the offers that have been made to us on that. The PPL did change the game when you talk about institutional investors. One of the issues when we were doing road shows, when we're sitting in front of the major investors, the very first question always was approvals. What approvals do you need? What approvals? What problems do you have? What do you see as the risk to the approvals? Those questions have completely gone. I've taken great delight in being able to go back and sit in front of those institutions and funds and the fund managers who told me I would never get the approval and inform that we have got the approval. And that was extremely important. I can say this very, very clearly. When we in the past have been going to institutions, you have to book meetings. Anyone who's been involved in this industry knows full well that not all fund managers, not all institutions will take a meeting with you. Some of them won't invest in fossil fuels. Some just don't think you're big enough or it's too early in the process. Since we announced the production license, it has been the reverse. We've been approached by institutions this week. We're in front of at least 4 of them interstate, and the level of interest by them has been huge. We looked at an acquisition last year. We were able to raise, between us as a company and between our supporters and institutions, $1 billion. We still have those companies regularly in contact with us. We still speak to them, and their interest has not changed from when we were first talking to them. The only difference I'd say about institutions, other than the fact that the Petroleum Production License actually gave us access, and by that, they called us, not we called them, is the fact that traditionally, getting investment for this type of project required overseas money. So I would often go to London or New York. That's completely gone. That's completely finished now with COVID. You can do Zoom meetings, but let me assure you that raising large amounts of money over Zoom is not the optimum way of doing things. Although we did do recently that placement through New York, and that was done through, through the Zoom and Teams, but it was difficult. As a process, it was difficult. From a legal point of view, it was difficult, and that slows things down. So our relationship with institutions has changed. Our relationship with fund managers has changed, and I think you're going to see that reflected very, very soon on our register.
I noticed yesterday that you've also got coverage by an institution, MST. That's quite impressive. That's quite exciting too.
Yeah, it's, you know, a lot of people are skeptical. I mean, you know, you can get paid research, and sometimes that research is very one-sided. You know, you get the big houses will do their own internal research. You can't sit in front of their clients until they've done that. We're actually going through that process. But MST did a great job on this one. It came out yesterday. I encourage anyone who wants to have a look at it to have a look and read it, because it actually does cover it. It's quite comprehensive over the issues in that. It only came out yesterday. I think that some of the highlights from it were it pointed out the fact that we'll be the first fully integrated urea plant. And what does that mean? You know, it's a nice little statement, integrated plant. What it means is from start to finish, we have the product, we have the gas stream and the feedstock at site. We'll have the ammonia production at site. We'll have the urea production at site, and we have the transport facilities there at site. So right from the start to the finish of the process, we have it in one location. We have control over our feedstock costs. So it's extremely important that they actually pointed out and recognised that. More importantly, or just as importantly, it was also recognised in their report that it will take away the reliance of farmers in Australia on imported product, which, by the way, it's interesting that they're actually seeing that at the moment. It's actually getting difficult for some of the farmers to actually get urea onto their properties because of supply chain problems. COVID has caused that, but there are also other reasons behind it as well. But this report points out correctly that this will alleviate any possible supply chain problems in the future. So I just think that the report's a good one. I think that it's one that's worth reading for people. It'll actually give them a good understanding of the financials and the forecast and that was prepared by them.
Fantastic. Thank you so much, Justin. Just this next question, government budgets, is there anything there for Leigh Creek?
It sort of ties into hydrogen. It sort of ties into the government grants that you were talking about before and the access, and it ties into, does the government actually assist us, or are they helping us in any way? If you wouldn't take much research to go back and have a look at how the federal government recently identified that gas, right, as an energy and domestic manufacturing fuel is a key plank of their recovery for the post-COVID-19. You don't have to be a mushroom. If you were reading the Fin Review, I can't remember, I think it was in the Australian as well in the last couple of days, they were talking about the fact that it's anticipated there's going to be a gas shortage coming fairly soon because lack of exploration in Australia over the last few years. I just think that we're right at that pointy end of the game. We have gas. We will be making urea with that gas. And the federal government recognised that gas is an important plank in recovery from COVID-19.
Thank you so much, Justin, for your time. I think that's covered everything Pulse Markets had to ask today. I think our shareholders, our investors are going to be very happy with what you've said, and I really thank you for your time. Thank you very much, Justin.
That's all right, Sean. Well, thanks for the opportunity. There are a lot of important questions, a lot of important issues within that last 30 minutes. We're working hard to make this work. I'm very proud of the fact that as a company, every single milestone we said we would achieve, we have achieved. There are more that we are achieving, and we'll have them done as well. And I'm looking forward to updating both you and the market in the near future on our next steps.
Well, I'll let you know I'm still personally buying the shares. As you can see, my name's been propping up on the share register again and again and again. So I'm very supportive of the share personally. And I look forward to seeing what happens in the future. So very good luck.
I look forward to making everyone happy, Sean.
Thanks, John.